Welcome to the Wiser Wealth Management Roundtable. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom is my co-host today, Robert Swarthout. Hey, Robert.
Good morning.
This is our special edition digital asset podcast we look forward to once a month with my friend Robert here. And when we just get started the same way we always do, Robert, let's talk about what's happened over the last month in crypto land.
Yep. So we last talked on November the 23rd, so right before Thanksgiving. Today is December the 21st, so roughly a month out. Bitcoin in November was at 56,739. Today it's at 48,688. So it's been down. It's been largely sideways except for about 2 days during that period, and we'll kind of talk about that in a moment here. Ethereum was at $4,170 a month ago, and today it's at $4,013. XRP was at $1.04, and today it's at 89 cents. And just generally, the market cap a month ago was $2.64 trillion. Today it's at $2.27, so about $400 billion in value less. And kind of alluded to it a moment ago, but on December the 3rd and 4th was a good-sized sell-off in most of crypto. Bitcoin leading into the 3rd was at 56,000, and by the end of the 4th, the morning of the 4th, so about 24 hours, it was down to 46,000. So a 20% drop in about 24 hours. And then it's been sideways, up and down a little bit, but largely sideways since then. So that is the market update.
So something that you texted me, was it last night, that the bear market and crypto is shorter, and then the bull market is longer.
No, bull market, no. Bear market's longer, bull market's shorter.
Gotcha.
Yeah, it's, people are used to equities and largely things going up and to the right over time. There's extended bear markets in crypto and shorter bull markets that are more, I guess, exhilarating, I guess is the way to put it.
Yeah. So it's more of a straight up line.
Yes. Things that go up seem to fall even faster. And so it's like a bunch of exuberance at the end of the last crypto bear market was from January or February of 2018 to last October last year.
Yeah.
So roughly 3 years, or 2.5 years. This bull market has been interesting because it's the cycles seem to be elongating from everything that I've seen from the chartist and technical analyst out there in crypto. No one really knows where it's going, but some people tend to have a better idea than others. So yeah.
Yeah, I search articles about different topics, and it's amazing. A lot of the writers will put in crypto's up 100% this year. Well, yeah, it was up 100% on November 21st.
Yes.
But today it's up 60%.
Yeah,
year to date.
There's no doubt that 2021 has been a great year for crypto. But, you kind of have to have, a pitcher's mindset where you kind of forget the last 3 years before that.
Right.
But, crypto's so new that even if you rewind 3 years ago, the peak of Bitcoin then was around $20,000. People would be losing their mind if Bitcoin went to down to 20,000 today.
Yeah, that's true.
It's 48,000 change. To think that you had a 2.5-fold increase in 3 years in the stock market, people would be super exuberant.
Well, you've got a 60% return year to date, but you still have nearly 100% rate of return over the last 12 months.
Mm-hmm.
But you just mentioned 3 years.
Yeah.
3 years is a 1,111% rate of return.
Yeah.
That's pretty good.
Yeah, you just have to have a strong stomach because those bear market years can be rough. They feel like they're never going to end. They call it crypto winter, where think of it an ice age of sorts. So
it has a very strong, probably compelling reason for people to invest in it. I think what people have a hard time with is.
I'm going to correct one thing. Invest, I would say speculate.
Speculate, thank you.
Yes.
People just have a hard time, at least our clients, I feel like, they go, well, what is it? I can't touch it. I can't vote. I can't.
Yeah.
What is it? And we talk about this every single podcast about what it is.
It's, in some ways it's learning itself what it is, right? It's evolving. It's evolving quickly. A year and a half ago, NFTs were a thing, but no one talked about them.
Right. True.
Now, all you could hear all summer long is NFT this, NFT that.
That's non-fungible token.
So
and basically, I call it. They took your baseball card and they made an image of it and,
right.
and identified it as yours online, and now all of a sudden it's
you can track where who's owned it effectively.
Right.
It's one of the major upgrades.
And the corners don't get bent.
Right. Yes. You just have to keep your laptop charged. Yeah.
Right. Yes.
So things are evolving. There's maybe take this moment to kind of talk about. There's different kinds of blockchains, right? So blockchain is kind of the general term. There's what you would consider proof of work. So that is a bunch of compute power being used to do math effectively. Bitcoin was the first. Ethereum is another type of proof of work. Proof of work is largely a type of network that is on its way out. Ethereum is in the process of migrating away from proof of work to proof of stake, which is another one. Proof of stake.
Now you're talking about the different types of blockchains.
Correct.
Yes. So,
the underlying
so
technology.
many people think the blockchain, they think these numbers passing through the air, and that's the blockchain.
Yep.
It's kind of like the cloud.
Correct.
But there's different types of blockchains. That's what you're describing.
Yes, exactly. So the math part of proof of work, you can really think of as it's a lottery that's happening, and they're just guessing a bunch of numbers, trying to figure out who's going to be the winner for that period of time. Bitcoin blockchain can be, as short as I believe around 10 minutes, could be up to an hour long. So in that period of time, you're trying to guess, I think the number's this, I think it's this, really, really quickly. Specialized computers just to do this. And then if you guess the number right, you get a portion of the Bitcoin that is being unlocked for that period of time. New Bitcoin being created. You also, on proof of work, are validating transactions on the network. And as payment for doing the confirmation, saying, yes, this is going from here, or whatever is going on, you get some reward for that as well. There's contention between the miners that on the network and the users of the network. The miners want higher fees. The users want lower fees. So there's that contention going on. Bitcoin, you don't hear as much about Bitcoin getting backed up and overloaded these days. You might hear about an Ethereum paying high gas fees. Gas fees is the fee you would pay to do something on the network, transfer something, buy an NFT, mint an NFT, all that kind of stuff. So like I mentioned, Ethereum is moving from proof of work to proof of stake. Proof of stake means that you literally own X number of Ethereum and you're going to hold it in a wallet effectively and kind of say, the more value that's locked into the network, the more confidence that is in the network. So it's kind of a chicken and egg problem of sorts. You have to get people to believe in it before they may want to believe in it. So it kind of builds value over time. And they use more efficient algorithms to kind of do its math effectively behind the scenes.
So we always talk about someday our home deeds, car titles, all that stuff could be in the blockchain. What type of blockchain is that? Because it's almost like stored.
Yes, there is storage. NFTs are on Ethereum now. It's one of the biggest networks for them. It's almost like programs that run on Ethereum, the dApps. They call them distributed applications that help run those things. Ethereum is the one that has the most critical mass, so it's drawing the most interest. The problem is its transaction speeds prevent it from doing a lot of things efficiently, which drives up the fees. So that's why these other networks are popping up. So proof of stake is where Ethereum's headed, but there's other consensus type networks. Consensus is just basically saying there's servers on the network that in such a period of time agree on things. A high percentage of agreement, so say 80%, that means those transactions that they agreed on get written into the stone and move on to the next block. More and more networks are the consensus type of thing. There's small variations and they use different algorithms, but generally they are the smoothest and the most transaction efficient. So there's networks like XRP could be 1,500 transactions a second, where Bitcoin is 5. Ethereum, I think, is 45 or something like that, if I remember correctly. And that will improve for Ethereum when they move to proof of stake. There's some networks claim hundreds of thousands. Well, the problem is they have nobody using it, so who cares? But over time, house deeds are no different than an NFT. So they could be on various different networks that support NFTs or NFT-like things. An NFT is not exclusive to Ethereum, but you can kind of have different specifications for an NFT on a different network that maybe are more suited to a house deed or a car title or something in real life.
Do you think in the future that we have problems with networks talking to networks?
The the word is interparallelity. Sorry about that. A little tongue-tied this morning. So moving an NFT between networks could be a challenge. I don't know enough about NFTs to say one could or could not move from a network. I tend to believe that they're probably almost locked into that network. But where you start getting in and out of a network is the value of that item. So like if I want to buy your house and I don't have, you've got your Ethereum NFT that is your house deed, like I could bring value from another network, and we would just have to have a market maker for that pairing, say XRP to your NFT, for instance.
Let's shift gears a minute. Let's go back. We had a Bitcoin futures ETF. We talked about that in the last podcast or last two podcasts. We continue to get denied a spot ETF. So we're not getting what the market is demanding, which we want an ETF that owns Bitcoin, right? Mm-hmm. I think when that happens, that there's going to be a tremendous amount of money pouring into that ETF.
I think everybody would agree with that,
and
even the SEC.
Yes, and I see that pushing the price up.
At least short term, it would seem like it would be. There may be like a stampeding herd. I read something yesterday that said that 90% of U.S.-based asset managers do not have access to crypto for their clients.
Yeah, I can see that.
And of the 10%, that doesn't mean the 10%, the other 10% are doing it, but like there's a lot of money sitting out there that functionally on the sidelines that, most people don't need a big allocation at all to crypto, just due to the risk of it. But it is definitely something that, if I had to place a bet, I think we see a spot Bitcoin ETF in 2022. There's pressure from Congress asking why we can get a futures, but we can't get a spot. And it's just kind of comical. I mean, when they asked that question to Gary Gensler recently, I think it was a Senate hearing. He said that because of money laundering, and it's just like so crazy because like
what?
There's far more money laundering happening with U.S. like hard cash than there is like with any sort of Bitcoin or crypto in general. So it's just kind of like you come up with a better excuse.
Yeah, but that wouldn't affect money laundering is not going to affect an ETF.
They think it's going to make it more efficient and easier for them to do it across borders because it's hard to move cash.
Yeah, that's true.
I don't know,
but that would be Bitcoin. That'd be a problem with Bitcoin itself, not the Bitcoin ETF.
Correct.
Bitcoin ETF is we registered in the U.S. You own it inside a brokerage account.
So the flip side of this is there's been, I think it was the CIA or the FBI, probably the FBI, that at one point said they actually like it when criminals use blockchain because everything is in the public and it's tracked and you can't like erase it. So right. It's like in some ways
they just have to find it.
Right. And like, there's startups out there helping to anonymize the data on the chain. So you can kind of like figure out who did what, even though there's not names attached to it. So I don't know. It just seemed like a silly excuse that probably needed more thought going into it than,
Well, it probably just satisfied the answers in front of the panel that he was at.
Some of the senators, some of them not. Yeah, Senator Toomey, I believe, is pretty hard pushing, and I don't think he took kind to such a poor answer. So,
and the futures ETF is still underperforming the spot price of Bitcoin. So you're trading the futures. You're not actually owning anything with Bitcoin. So you have to be very careful. I personally would not invest in a futures.
I don't own any
Bitcoin futures, ETF. I that's not the exposure that I'd be looking for. So on that same topic, let's talk a little bit about the RWM WisdomTree Crypto Index. This is
something new.
This is something new. One of the guys that I look up to in many ways in our industry is Josh Brown over at Ritz-Holt Wealth Management. I have met him. He probably would never remember that. But I sat on a panel with him at an ETF.com conference just before COVID. I honestly had never heard of him. And it was like a rock star was sitting on the stage. And we have CNBC on here all the time, but it's on mute. I mean, I just look at his entertainment, and it's a live ticker.
Yes. Yep.
So I don't pay too much of attention to the talking heads, but Anyway, so Josh Brown runs Swarthout Wealth Management. He calls himself, I think, a hood ornament. He's not an actual advisor there at the firm. At least that's my understanding. But he has a great team behind him. They're based in Manhattan. So he's pure New York.
Yep,
so
in the heart of it.
Yeah. He's loves being controversial. I'm a good Southerner.
Makes good TV.
Yeah. So we're kind of polar opposite personalities, I think. But anyway, so they have clients that ask about crypto, and they got together with WisdomTree and created a crypto index. Now, what's interesting is, you can't actually invest directly into, it's not an ETF. You can't invest directly into, right now it's just an index that tracks various cryptos, but it's powered by a company called OnRamp. So OnRamp be kind of like a TD Ameritrade or a Schwab. You can get on to OnRamp and trade cryptos. And specifically, this OnRamp is built for financial advisors. So there's other platforms that are also emerging that the big wirehouses are not playing nice with, simply because they see it as additional risk. And if TD Ameritrade, Schwab, or Fidelity wanted to do this themselves, they could do it overnight. They already have the platform and the client base to say, hey, we can now do this in our platform. And they're choosing not to do that right now. So, of course, they're not going to play with these upstarts because they want it for themselves, or maybe they just buy one of them, possibly.
Yeah, possibly, yeah.
So this is a RWM, is Swarthout Wealth Management, that they're investors in the project. WisdomTree, I call that a second tier. I'll probably get in trouble if this was ever found out, but I'd say call it a second tier indexing company outside of like a Vanguard, S&P, right, or BlackRock. I've loved WisdomTree indexes. I just find that their AP, their authorized participant, has always charged a premium for the product.
Okay.
So I never thought they traded efficiently, and I've told them that, and they're like, "Oh no, we trade very efficiently." And then I show them, and no one says anything. But anyway, they have great ETFs. The company's been around for a while. So the idea here is they're going to create an index. And I love indexing. So I love the fact that I want to put all my eggs in one basket. I want to have, I want to own a bunch of different things. I don't know that it applies exactly to crypto yet, but
it's probably a little early.
Yeah. So it's going to be very top weighted. Basically, you're buying Bitcoin and some of its friends. Yep. That's what you're doing.
Yeah. I mean, I said it was early, but I would say it also, if it gets people interested in crypto, I'm all for it. Good or bad at this point, because it's people just need to learn more and more and more about it.
So I'm going to just read right off of, trying to make it entirely boring, but I want to read right off their description.
Okay.
And let's dissect what some of this means. So the RWM WisdomTree Crypto Index seeks to provide broad and diversified exposure to crypto assets, sometimes referred to as cryptocurrencies or crypto. I love how they put that in there. It's like, yeah, we know. Okay. Now we get more advanced. Spanning layer 1 networks, layer 2 protocols, Oracle networks, and crypto indexing services, and decentralized finance, which is known as DeFi, and the metaverse. What did they just say?
That's a bunch of buzzwords.
It is a bunch of buzzwords. But the first time I read this, I was like, what? Yeah. So layer 1 is...
Layer 1 is the most basic of crypto. So it's a Bitcoin, it's Ethereum, it's an XRP, it's a just a network that in and of itself doesn't rely on anything else.
Okay.
Yeah.
Makes sense. Layer 2.
Layer 2 is applications or side chains that run on top of other networks. So Ethereum, like we were talking about earlier, has issues with throughput and number of transactions backing up. So there's other, like I think Polygon is one, and there's many others that are running on top of trying to help do number of transactions that they roll into a single transaction that go down to that lower network effectively.
So when a cryptocurrency says we're in a Ethereum-based
ERC20 token,
yes,
that is a version of that, yes.
So that'd be a layer 2,
effectively.
Okay. Oracle networks.
A little more complicated here. So Oracle networks are networks that take data from the outside like outside oracles bringing data, from the outside world into the blockchain world. So basically, like maybe the price of oil or the price of gold into a tradable asset on the blockchain.
Interesting. Crypto indexing services.
That's a little vague. I'm not quite sure what they're meaning by that.
And they don't have, when I get into the assets, they don't actually have an example of that in their current holding. So maybe it's intentionally vague. Decentralized finance, DeFi.
Yeah, that was before NFTs were the rage. DeFi was the rage. So DeFi could be liquidity pools or interest or, just basically finance-like things running on a blockchain that are not controlled centrally by a company or government.
Okay. And then the metaverse.
Boy,
the metaverse. The is not capitalized.
This is not Facebook. This is
right.
They're maybe part of it, but there's tokens that are so you can buy land. Decentralized. There's a token literally called Decentraland, I believe. You can buy virtual land in this thing. I'm just kind of like, whatever floats your boat. That doesn't make sense to me. But
so it's kind of like buying real estate inside. What's the
Minecraft, SimCity, all those kind of things. It's like, but it's even more like, Nike has a shop that you can, or they're about to launch a shop, I forget, where you can go into the metaverse and buy shoes, and you get the NFT, then you can go buy the same shoe in a real store or something like that. Like, weird. I don't know. I don't fully grok the whole metaverse thing yet, and I'm not quite sure I'm of the generation that is gonna fully grok it, or I just have a lot of homework to do. One of the two.
I guess if we're all sitting at home because of COVID variant 50, that eventually we just live this fantasy world. That's the only thing I came up with there.
I've seen lots of memes around people that are into the metaverse versus people that are not, and like the difference between them. They're kind of funny. You have to search them out.
So basically, the index includes crypto assets constituents through a methodology and process that considers use cases and importance to the crypto ecosystem. Let me skip down. The index, as currently constituted, captures approximately 64% of the total crypto market cap, providing a diverse exposure to overall crypto economy while seeking to present unique growth opportunities. So basically Bitcoin, and we're going to add some really risky stuff, is what it's saying. Membership criteria has to be associated with public blockchains, as active in liquid trading markets, which makes sense, listed on one or more eligible exchanges, priced by third-party independent data provider, and has to be in the top 150 of digital asset market. And has custody support, and it excludes stable coins. Stable coins are coins based on U.S. dollar and other currencies, right?
Correct. Yeah.
So right now the weighting is 36% Bitcoin, 20% Ether, and then 4% of the selected 11 other crypto assets, referred to as altcoins. And then the committee can make changes to this as they see fit. And then the index calculation is a company called Coinmetrics. So obviously Bitcoin is the largest holding, Ether. Then we get into Phantom. Actually, it was interesting. They have a little discrepancy on the disclosure, but it says here the second largest holding is Terra, Terra.
Yep.
Which is a layer one. Uniswap. So now we get into the 4%. So basically Bitcoin, Ether, and then everything else is a 4% weighting.
So Uniswap would be an example of DeFi. So it's basically an exchange, a decentralized exchange that runs on, in this case, Ethereum for Uniswap that allows you to trade cryptos.
Okay. Yeah. Chainlink, which is a Oracle theme. Polygon, which is a layer 2. So that's running on top of...
That one is a sidechain, I believe, for Ethereum.
Okay. Decentraland.
There we go.
There you go.
Yeah.
Layer 2 protocol. Phantom.
Yeah.
Which is layer 1. The Graph.
Quite honestly, I can't say I've ever
heard
that
one. That's indexing. It's an indexing service.
Oh.
So that's how that gets worked into...
Interesting. I have to check that one out.
It's like a fund of funds, I guess, in my world.
Maybe.
Aave, AAVE,
Yep.
Engine Coin,
Yep.
which is Metaverse.
Yes.
Yearn Finance, which is DeFi,
Yep.
and then Sushi Swap.
Which is similar to DeFi, which is similar to Uniswap. Yeah.
That's anyway. So we're not endorsing any of those necessarily, but this is what Ritzolt Wealth and WisdomTree decided to come up with on creating an index that tracks this.
And it's interesting to have this. Obviously, this is U.S. based. The index said in their description the top 100 up to the top 150 in market cap weighting they could use for selection. I don't know exactly the amount, but the top 150, not all of them are available to U.S. investors on U.S. Licensed exchanges. So you have to understand the lens that you're getting the index through, because it's has some political partiality to it. So
the graph, looking at the description, it's a indexing service for the blockchain. It groups data protocols such as Ethereum and Filecoin into subgraphs that users can query from. GRT is frequently referred to as Google for Web 3.0. It's integrated with protocols and marketplace such as Chainlink and Polymarket. Its native currency, GRT, is used by indexers, delegators, and curators to maintain their indexing services. I kind of half know what I just read.
That's fine. There's so many new things going on. It's keeping track of it's quite hard. Like, I can't say I had heard of the graph before we had this conversation. So
yeah. But there's how many coins are there now? Like 5,000 something?
No, 13,000.
13,000. Okay.
Yeah, so
Stanford,
513 is all the same.
Globally.
Globally, yes.
Yeah. Okay.
Yep. And global is interesting because it's just on the internet. So
right.
I mean, just because a U.S. exchange doesn't sell it doesn't mean you necessarily can't get it.
And none of these are Shiba Coin or Dogecoin. None of those are on that list. These appear to have utility to them.
Yes, I would agree with that. The one that I found interesting on the list was the Decentraland. I don't know if Facebook hadn't come out and said they were basically a metaverse company now. I'm not quite sure that one would have made the list. I don't know. It just seems like no one heard about metaverse until 2 or 3 months ago when Facebook and a few other companies started making a splash with it.
True.
And then now you see it in this thing. So it seems a little bit hot topic in their at least of the ones listed in their list. So,
well, the whole metaverse, Facebook, the metaverse thing is very that could be a whole podcast in and of itself. But
you have to get a different co-host for that because I don't know anything.
Well, I just feel like you say Facebook and everyone thinks like my generation. Oh yeah, this is me and older that are on Facebook,
right?
And you change the name to Metaverse, now all of a sudden it goes to a whole different younger generation. So it's almost like making Facebook legitimate again, if you think about it.
It's an attempt,
or at least
we'll see what happens. Yeah,
see what happens with that. But well, every podcast I feel like I learned something from you. So thanks for doing this with me.
Absolutely.
And honestly, I'm reading through a book called Bitcoins and Blockchains now, just to try to stay on top of this. I feel like that, I always go back to, okay, I run a wealth management firm, and does this belong in client portfolios? And I don't have an answer for that. I get emails every week. Hey, what do you think about this? What do you think about this? And I go back to, I'm still studying it as a fiduciary to understand, is this something that we need inside client accounts going forward? Mm-hmm. I don't know. In the meantime, the answer is, hey, if you want to dabble and learn like I am, then maybe you have 1% of your total assets in it.
Yep.
If Bitcoin goes to 400,000, like they were talking about last year, which, there's a lot of similarities between this and just regular investing in that as soon as the graph goes up and to the right, people start tripling and doubling and quadrupling, that number, and say, oh my gosh,
it's going to keep happening.
It's going to keep going up and up and up. And then when it's going the other direction, it's going to go to zero. And they do the same thing with the Dow. Mm-hmm. And so there's all types of emotions that go into this. I will say that my clients who are using this regularly also enjoy gambling. And my clients who do not enjoy gambling or taking extreme risk, like the S&P 500 is like, oh, I don't know about this.
Yeah.
They're not touching this with a 10-foot pole. So it's definitely not something that I don't think that advisors can just throw into a portfolio and go, okay, here we go.
Right.
And if you did it, you better do it in a very small percentage because you have a really good case. They have a really good case against you.
Sure.
if it blew up.
Yeah. I mean, just the beginning of December when Bitcoin drew down 20% in 24 hours.
Yeah.
So, because if something feels risky to them, you can be darn sure they're going to be paying attention to it more so than they probably should be. So
right, absolutely.
Yeah.
Well, good conversation. I look forward to starting the new year with another episode.
Sounds good.
Thanks for listening to the Wiser Roundtable podcast. We hope you enjoyed it. Make sure to subscribe wherever you're listening. That way you don't miss out on new episodes. Head to wiserinvestor.com and reach out if you have any questions. We would love to hear from you. Today's episode was produced and edited by Lilton Moore. Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.